Good morning, good afternoon, good day. Welcome to my live market meeting 18th June 2020. I am Sagar Nandi. I used to work in IT. I have retired now. I am swing trading stocks. I'm staying in Thailand, living in Thailand, and swing trading stocks using the Q trading systems and techniques that I developed. This is my email ID tradingprofitably@gmail.com and my YouTube channel Trading Profitably, where you may watch this and other trading related videos. This is my Twitter handle Sagar Nandi and my traders forum sagarnandi.com. I regularly share live stock and market analysis on these forums. All these resources are open to the public and you are most welcome to make use of them. Disclaimer: I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live market meeting. I have not prepared for it. We look at the market, sector, industry, and stocks together. For technical analysis, I will use Q Elite running on TradeStation and Q Global as well as Q Finder running on MetaStock. For fundamental and peer analysis, I will use Q Vital. For sector industry rotation analysis, Q Edge, and for market and index analysis, Q Index. That was the last slide of my presentation. Let me continue with the live system. Let me check. Are you able to see my screen and hear me clearly? You may use the YouTube live chat panel to let me know. You can see I have started running the Q Finder bearish and Q Finder bullish scans. These are two combo scans available on Q Global running on MetaStock. They look for all the possible bullish and bearish signals on a list of stocks. I am using a list of liquid stocks in the USA market that has more than 1000 stocks in it. Let this continue running. Meanwhile, I look at the global market. I'm starting with the Australian market, AXJO, the index AXJO, using the Q entry chart template, that is a daily chart template running on Q Global on MetaStock. AXJO is going up. It is in an uptrend. The last possible buying opportunity was on this day when it gave a green traffic light candle color. Prior to that, the traffic light candle color was bearish red. At that time, you could buy AXJO, or considering the fact that it was close to the upper boundary level, you could look for low risk buying opportunities in individual stocks. Australian market is in an uptrend. Let's look at the Hong Kong market using the index HSI Hang Seng Index. This is also going up. Price is supported by memory support trend line. It has higher high and higher low. If you are looking for any trade in the Hong Kong market, in individual stocks, you may look for them in the long direction, not short direction, because even if the Hang Seng Index came down from here, there is a memory trend line support, automatically drawn smart trend line. It will be difficult for Hang Seng Index to sharply pierce through that memory support line. That's why I will suggest avoiding short trades in Hang Seng Index components right now. Instead, you may look for buying opportunities in the Hang Seng components. India's Nifty 50 Index NSEI in a very nice uptrend. Today it gave a cyan flow color candle that was an optimal buy point. You might look to buy individual stocks today. The prior flow cyan candle came at this point. If you bought the Nifty at that time, you could book profit at the upper boundary level. Today's cyan flow candle came very close to the upper boundary level. If you didn't want to buy Nifty itself, you could look for low risk buying opportunity in individual stocks, maybe the Nifty 50 constituents. Let's look at the UK index, FTSE index, FTSE. This is also in an uptrend. It has higher high and higher low. Price is supported by a memory support trend line, though the trend is not so strong as in the Indian market. Looking at yesterday's candle and today's candle, both of which have very small bodies. It seems the FTSE index is indecisive at present, trying to decide whether it will go up or go down. You may avoid trading in the FTSE index right now. All the global markets are bullish. None of them are in a downtrend. Let's look at the USA market. Let me change the templates to simplify them. I'm using Q Elite on TradeStation and I'm using hotkeys on TradeStation 10 to change the templates. Let's start with S&P 500 index SPY. It is in an uptrend. Price is supported by memory support trend line. It came to the yellow direction line and white direction line and went up from there. At the upper end, it has a watermark resistance line. There is a watermark support here. Right now, price is right in the middle of the two watermark levels. That is not an optimal point to take directional swing trades. Instead, if price could come to the watermark resistance and reverse from there, or came to the watermark support and bounced up from there, then you could look for reversal short trades at the top or reversal long trades at the bottom. Right now, I will avoid taking any trade in S&P 500. Because S&P 500 represents the market, you may see that it is not easy to find lucrative trading opportunities in individual stocks. Also, what you see in S&P 500 ETF SPY, you can see that in the S&P 500 futures also. I shared a tweet, I think after yesterday's market close. Let's go to my Twitter page. That is twitter.com Sagar. This is a picture that I shared. This is S&P 500 futures, E-mini futures, ES, the continuous contract. It has a memory trendline resistance at the top and multiple memory trendline supports at the bottom. Price is right in the middle of the two memory lines. This is not a place where you may look for directional swing trades. Also, if you see the daily candles, they are indecisive for 2 successive days. Another reason to stay away from directional trades right now. That is what we can see from S&P 500. Let's look at Dow Jones Industrial Average ETF DIA. Also in an uptrend. Remember earlier when price came to this point, I had mentioned that the shorts I took at the very top, I covered them. I booked profit in them because I noticed there was a memory trendline support in DIA. These supports work pretty well. I did well to book profit in my short positions because from there DIA went up, the market went up, and those individual stocks also mostly went up. Today's traffic light candle color is red, however it is right on top of the memory support line. That is not a point to short DIA. I will avoid taking any trade in DIA right now. Russell 2000 ETF IWM. This is also in an uptrend. Price is supported by memory support trend line. We have two bearish color candles in the daily chart. However, again, the memory support is too near to take any short trade right now. What about QQQ? Nasdaq ETF QQQ, it is the strongest of the market ETFs. It made a new all-time high today on a closing basis. If you look at the weekly chart, at least on the weekly chart, in the daily chart, it is little bit shy of the previous all-time high. It is in a clear uptrend. Price is supported by memory trendline support. Unless this support is broken, I am not going to consider taking any short trade in QQQ. That was a view of the global markets, Australia market, Hong Kong market, India, UK and USA market. All the markets are bullish. In this market, are you going to look for long trades or short trades? If we are buying stocks, we are taking long trades, we can only make money if the stock goes up. If we are taking short trades, we expect the stock to go down to make profit. That is why it is important to look at the technical charts to see what individual stocks are doing. There are different ways of finding trade setups that are low risk high probability in Q systems. You already know about the top down analysis approach. We could use that. This is Q edge where we can see the sector industry rotation in real time, and then we can drill down to the strongest industries or weakest industries, drill down into their stocks and then look for trade setup. That is a top down approach. Or we could carry out a bottom up approach where you run the combo scans, Q finder bearish and bullish, and try to find technical trade setups first. From there, if there is a technical trade setup, then you may check for the stocks fundamentals and industry to make sure all the forces from these three levels, technical, fundamental and industry, are aligned. I just ran these two scans, they completed just now. You may look for trades from the scan result in Q finder. However, sometimes you can anticipate a trade. This is Q finder. Here you can see the different Q signals. I have transferred the data already from the scans to this Q finder. You can see the different Q signals for all the 1000+ stocks on which it ran. This is the data from yesterday. I ran it before market open around 3 a.m. Eastern Standard Time. Therefore, it is the result from yesterday. What did I see here? 80% of the symbols on which I ran the scan, that symbol list has more than 1,000 stocks, all liquid stocks, all with at least 5 years of history. Most of the signals were bearish yesterday, the Q signals, 80%. And most of the symbols were bearish and most of the stocks, more than 80%. Symbols and signals all were bearish. If you look at the three categories, strength signals, they were mixed. Trend continuation signals, they were predominantly bearish. The red bars were much bigger than the green bars. The red color in all Q systems represent bearishness. The continuation signals, that is the breakout, pullback, retrace, and go with flow, GWF, go with flow, that is the trend following trade setup in Q systems. All of them were more bearish than bullish yesterday. And the trend reversal signals, the touch, bounce, headwind, box, and reversal, they were not so dominant, and you can say a little bit more bearish than bullish. Touch, headwind, reversal, all were more bearish than bullish. This is the picture from yesterday. So what I did, let me explain. I looked at the bounce signals, bounce and memory touch signals. They provide an opportunity to short at the very top. And if you were looking at touch and bounce on the bullish side, they provide an opportunity to buy at the very bottom. Because the market is at a very high point, what I did yesterday, that is today before market open, I looked for the stocks. I was looking for a shorting opportunity at the top, the stocks that were bouncing down. How did I do that? I went to the bearish tab. Here we have all the Q signals at the top. I was looking for the bearish bounce. You may put cursor anywhere on the column and click this select column button. That will show you only the stocks that are giving bounce short signal on the day. The orange color cells represent today's signal. And this is the result from yesterday's market close. I saw 4 stocks. These are their symbols: VMC, LEN, Baidu, and CWT. Out of that, Lenar came to my attention. Why? Because this is at price extreme high. I like to short at the very top, and using Q systems I am able to do that. I don't have to take only trend following short trades. Because Lenar is at price extreme high and it touched a memory resistance, bounced down from the memory resistance and went down yesterday by minus 0.75%, it could give a very low risk shorting opportunity. The blue cells represent this week's signal. So you can see it also gave a bearish flow color candle within 5 days. It had a gap down move within the week, that is 5 days, and also a bearish pressure. So it is looking like the stock is reversing from extreme high. This is the kind of short I like to short. Instead of looking at the technical, I could look at its fundamentals first using this peer analysis icon, or I could look at the technicals using the chart icon. Let me look at the technicals first. This is Lenar using the daily chart. I am going to use the options at the top of the menu bar to look at it using the standard Q at a glance, that is weekly, daily template. And what can I see from here? In the weekly chart, it had a very strong up move. Then for 1, 2, 3, 4 weeks, it is stopping, not able to go up, and currently it is stopping at the memory resistance line. 1 week ago, it tried to go above the memory resistance but closed lower, At that time, it displayed a bear release signal, and this week again, it tried to go above the weekly memory resistance and pulling back. In the daily also, it came to the memory resistance line and came down from there yesterday. That is why in Q Finder you see Lenar LEN as a bounce and touch bearish setup in Q Finder yesterday. Today it dropped further because you could be ready with the stock. You could take a short trade today using intraday fine tune chart. But before doing that, you might want to check the stock's fundamentals. Let's do that. You can come back to Q Finder and click the peer icon that is going to do a fundamental and peer analysis of Lenar using Lenar LEN as the root stock. This is using Cube Vital that is running on Metastock Zenith. This is real-time data. Everything, all the Q systems can be run in real time. I'm running Cube Vital in real time. What can you see from here? Today, Lenar's industry, that is home building, is very weak. 91% of the stocks in the industry, that is 22 peer stocks are there. Out of them, 91% of stocks are down. That is very bearish. The stock is down by 2% as of now. It has medium valuation, positive, however, reducing earnings growth. Because the earnings growth is coming down, that allows me to short the trade, short the stock. Before shorting, I would like to check the industry. I have an idea about the industry from this last percentage of peer stocks being down, but that is showing me the industry's weakness in itself. I also want to know if the industry is weak relative to other industries. That is the information that I can find out from QEdge, that is the real-time sector industry analysis tool. I can access that and look up the home building industry, Lenar's industry, by clicking this cog icon in Cube Vital. Wherever you see cog icon, whether it is in Cube Vital or Q Index, you may click that to look up the industry's rotation insight in real time. I click the cog icon. It took me to QEdge and selected the home building industry. You can instantly see that it is one of the weakest industries today. There are total 147 industries for the USA market in QEdge, and it is one of the worst. You could look at the score, or you could just look at the color. Magenta and red are bearish colors or weak colors in Q systems. Instantly you can see that home building industry was strong earlier, relatively speaking, and it is one of the weakest today. The pace columns are showing that it is decelerating heavily today in real time and also over previous 2 days. Therefore, you found a stock where the industry is very weak. The technicals are giving a very low risk shorting opportunity, and the stock's fundamentals allow us to short the stock. Let me now explain how you could short it using real-time fine-tune chart today. Let me use Q Elite on trade station for that. I'm going to change the symbol to Lenar LEN. Here I am looking at Lenar using 10-minute interval. If you were ready to short the stock today, as I was, you would try to short it in the morning session, and in the morning session I use 5-minute interval. I changed to 5-minute interval using the menu icons at the top. I clicked 5. Now I am looking at Lenar using 5-minute interval using Q fine tune real-time chart. I was already ready to short the stock from yesterday's close at this point, but I ran the Q Finder scan after market close. I found the stock, I did the industry check, I did the fundamental check. Both were showing weakness yesterday also. Therefore, I was ready to short today. What happened today? Today price opened at this point. Soon after that, the early range high and early range low lines formed. Initially, price did not go below early range low. Instead, it went up, then gave me a bearish traffic light candle. You could short right at that point and put stop just above the recent high, that is at this point. You could put stop at this point and short at this price level. After that, price came down, hit the next major pivot support level. If you were day trading, you already had more than the risk distance covered by profit, and you could book at least partial profit, and you could hold on to the remaining position with a trailing stop. Now you can see in the last two bars, last two 5-minute bars, price tried to go up little bit, but it is stopping again at the memory resistance lines. These memory resistances work pretty well. You could use it to probably short it right at that point, or you could short it even now if it goes down and stops below, closes below the early range low. That will give you another shorting opportunity using the early range breakout technique. That is how you could get ready with the stock laner and short it using intraday fine-tune chart. You could use put options if you are comfortable trading options. Options may be risky, therefore you may be very careful before trading options. You may learn about that first, or you could short it using stock as well. Could you short any other stock in the home building industry? Yes, you could. And you could also be ready with the other stocks before the market open. How? Remember, in Q Vital, I ran the peer analysis. It found the 22 peers and it calculated the fundamental scorecard. Let's have a look at the scorecard. These are the stocks. If you look at the stocks that went down today, the stocks that went down today in real time, you can find them from this column, and you are going to look for stocks that are fundamentally weak in some way or other. One way to find those fundamentally weak stocks is to use these star icons. The green icons are for finding strong fundamental stocks and the red icons for weak fundamental stocks. The 3 stars identify stocks where both the valuation and earnings growth are weak, and the 1 star red color identify stocks where at least one of valuation or earnings growth is weak. I can see from the valuation column several stocks are undervalued. The valuation is shown in cyan color, and I can see from the EPS growth, the latest quarter EPS growth column, that several stocks have robust earnings growth. Therefore, I am not going to look for 3-star candidates where both valuation and earnings growth are weak. Instead, let me click the single star, the single red color button, and I came up with these stocks. If I sort by valuation, you can double click on any column header in Q Edge, Q Vital, Q Index, any of these Metastock Zenith based program, and you can sort by double clicking on the column header. The stock that came to the top is LGIH. If you look at the detail, it is overvalued, and if you look at the earnings growth, it has positive earnings growth. That is why I mentioned I use the single star button that found me stocks that are either overvalued or with negative earnings growth. In this case, earnings growth is not negative, but the stock is overvalued. From the below 52-week high column, you can see it is less than 4% below 52-week high. That is a very high price level. If you find a shorting opportunity there, that could be a very lucrative shorting opportunity. And today it is already down by more than 3%. Yesterday, the 1-day column now shows yesterday's performance. Yesterday it was also down by almost minus 0.8%. The fundamentals of the stock is weak, and the industry we already saw. Again, I can click the cog icon here to look it up again. We already looked at it in QH. The industry is very weak today, and it was already starting to weaken from several previous periods. What about its technicals? Let's look it up. I'm using Q Global again on Metastock for that. LGIH.O, O for ordinary shares. What can I say? In the weekly, it dropped sharply, recovered equally sharply, came to the exact same top, a level where a watermark resistance was formed, and this week it is pulling back from there. In the daily chart, there are several bearish headwind signals, and price is not able to go up for multiple weeks. It is in a sideways range. Are we ready to short it? We could short it at yesterday's market close. Let me redraw the lines again. If you shorted it at yesterday's market close, you could put stop just above the recent high and try to book profit at the memory support line. But if you didn't do that, and I probably would not short it yesterday because yesterday's traffic light candle color was still bullish green, so I would not short it yesterday. Instead, I could be ready and try to short it today using intraday fine-tune chart, and keep in mind that there is a memory support line very close, not as attractive as Lenar. Let me look at Lenar again. LEN, another home building stock, we saw it earlier. You can see Lenar also has a memory support line, but that is much further away. Therefore, Lenar is giving a better reward risk ratio in terms of taking a short trade. That is using the daily chart. What if you use the intraday fine-tune chart? Let's look at LGIH. That is the fine-tune chart. I'm using 5-minute interval. You could be ready to short LGIH based on yesterday's signal. Yesterday price closed here, however the daily was in green color. Instead of shorting yesterday, you could watch the stock today. Today the early range high and early range low pivots formed. It never went above early range high. You remember Lenar could go above early range high, but LGIH could not. Instead, it broke below the early range low at this point. You could short right at that time using 5-minute interval, and for the day you could put stop just above early range high. When price came to this level, you covered more than risk distance, you could book at least partial profit. These are two examples where you could get ready to take the trade based on Q Finder, based on Q fundamental analysis, based on Q industry analysis, and take the actual trade using Q fine-tune intraday chart. However, I should mention one thing, that when we looked at the market, ETFs, SPY, QQQ, etc., everything was looking bullish. That is not the best time to short stocks. There are 4 levels from which I try to align forces when I take the Q 360-degree trades. These are market, industry, fundamental, and technical. For these 2 stocks, Lenar and LGI Homes, LGIH, we have forces from 3 levels that allow us to short the stocks. Fundamental level, technical level, and industry level. However, the market level is still bullish. That is not allowing us to take the shorts. If you take, you have to keep that in mind and accept the trades that not truly give 360-degree trades. If you are not very comfortable taking the trades, it's best to stay aside. And if you still want to take a trade, you may take a trade using an instrument where you are not going to get stopped out easily. For LGIH, for example, let me open LGIH again. For LGIH, there is also a memory support line. If you were trying to take a short trade, it's not the best time to take short because the market is not bearish. But if you were at all taking a short trade, you might be careful and see that you don't get stopped out easily by a sudden move up, and after that the stock may drop again. Why the stock may drop again? Because I saw the industry is very weak. What to do in such a case? Instead of using the stock to short it, you could use a long put vertical. Today, if you use the early range fine tune chart, you could short it around this price point that was just below 90. Therefore, you could look for a short trade using put vertical around the strike of 90. Let's look at the option chain for that. I'm loading the option chain on TradeStation. Let's open LGIH. Because this is a swing trade, not a day trade, let's use monthly options. I'm going to look at the options expiring on 17th July. If you are thinking of taking a short trade using verticals, you could buy the 90 put and you could short another strike. Which strike could you short? Let's look at the technical charts. I can see that there is a direction line, the yellow direction line that is going up. By the time price comes to 80, it may hit the yellow direction line. If that is so, there is a kind of support at 80. If price starts to go down and comes to 80, then I may short the 80 strike. Buy the 90 strike that is just above the entry price, just in the money, and short out of the money 80 strike where I found the support. Let's use that in my option chain. I bought the 90 strike and let me short the 80 strike. This has two legs, this vertical setup. Buy the 90 strike, buy to open and short the 80 strike. Maximum profit in the trade is $603. Maximum loss is about $400. That is giving a very nice attractive reward risk ratio. And the advantage of using the put verticals in this case instead of shorting the stock is that we don't have to worry about applying a stop loss. Let's look at the analysis using the PNL graph. On the left hand side is the trade PNL and the x-axis is stock price. I have set up TradeStation to draw multiple lines. The white line is at expiry, day to expiry is 0, and the orange line is today, day to expiry is 29 days. It is showing that the maximum profit I can have is about $600 and the maximum loss I can have is about $400 here. That is using one lot. If your account size is larger, then you may, whatever be your account size, you may choose the number of lots to take equal risk in all the trades. This vertical may work very well in a case where you want to avoid getting stopped out by shorting the stock. However, one thing you may keep in mind that many vertical traders miss, if you see the different color lines, orange, green, blue and white. The white is at expiry and orange is today. Green is halfway between now and expiry, 14 days to expiry, and the blue is 2/3 into the expiry. You can see that even if the stock now drops heavily right now, you will not have maximum profit. Your profit will start to go up gradually. Instead of having the max profit 600 at 80 strike, even if today price went to $80, your profit is expected to be around only 200 plus dollars, nowhere close to the maximum profit that is achievable in this vertical trade. That is a shortcoming of using verticals. However, still in this instance, I may favor the short put vertical because I don't want to get stopped out by a up move in the market. The market is still bullish. However, the industry is bearish. Therefore, if I wanted to short at all, I could short it using put vertical. There is another thing that is favoring the put vertical trade. Let me show that using the volatility graph in Metastock Zenith by running the surface application. Here I am going to draw the volatility graph for LGIH.O, that is the symbol LGI Homes, and I am going to look at delta, the smile, how the volatility changes with different strikes. Let me focus on the July expiry, 1 month away, and set the boundary to 3.33. It is loading the data. You can see here the progress bar. It has loaded. What can you see from here? You can see the delta in the x-axis from at the money to 20 delta, call side. C suffix represents call, and on the left hand side you can see puts, again starting from ATM to 20 delta on the put side. P stands for put. What you can see from here, that at the money put side the volatility is lower than out of the money. As we go more and more out of the money, the volatility increases. That is why I like the long put vertical in this case, where I am buying at the money, near the money, just in the money, 90 strike, and selling out of the money 80 strike, because I am selling a more expensive option. This is a higher probability trade from the volatility point of view also. That means I could align forces from one more level now. I could align forces from the industry level. The industry is very weak today and it has been gradually deteriorating. I could look at the weakness from the fundamental level. LGIH is overvalued. I could check that from QVita, and technically of course it is giving a low risk shorting opportunity, except the fact that there is a memory support line nearby. That is also another reason that if I was going to short it, I was going to short it using the put verticals, not using the stop. And as I explained, I could short it using the intraday time frame, time it precisely using that. That is the way I could find the home building stocks yesterday itself and get ready and take them today using real-time chart. I ran the Q Finder scans today just now. Let me transfer the data to Q Finder and see how they are looking. Let's look at the reports of these two stocks, these two scans. Bullish, copy all, go to Q Finder, bullish tab, click the binocular button that, that will download the data from Q Finder scan, Metastock scan, and put it here. Now look at the bearish scan result. Go to bearish tab and click the binocular button. This is the data that I ran today. Let's look at the summary graph. Today is also bearish. 68% of the signals and 65% of all the symbols in my symbol list that has 1000 plus symbol list, they are bearish. And you can see earlier I showed the finder graph from yesterday, and this is the finder graph from today. Both are bearish, though yesterday was more bearish. And if you look at the different categories of signals, strength signals, very bearish today in terms of gap downs. Pressure signals may not show up properly now because the day is not over. Pressure includes volume in calculation. It may still need some more time to calculate if the bullish pressures are more or bearish pressures are more, but the gaps are certainly much more bearish today. In terms of continuation signals, yesterday was bearish and today also overall it is more bearish than bullish. On the other hand, in terms of reversal signals, it is more bullish. That is expected, isn't it? Why is it expected? Because we saw at least one market ETF, DIA, is right at memory support. When Dow Jones Industrial is at memory support and that memory has provided robust support earlier, we expect price not to go down suddenly unless there is a big news or some major event, something like that. When DIA is bouncing, we expect the individual stocks also to bounce, and that is what is shown by Q Finder also. Overall, it is still more bearish than bullish. Again, the market level is bullish, though individual stocks are showing more bearishness. We could look for bearish trades from the Finder today, but before that, let's look at the summary graph from Q Edge. This is Q Edge running in real time, the sector industry rotation analysis tool. 73% of the sectors are down today, that is 8 of the 11 sectors are down, that is bearish. Of all the industries in Q Edge, 64% are down, that is bearish. And of all the stocks in Q Edge, the S&P 1500 stocks, it is also more bearish than bullish. Q Finder is showing bearishness yesterday, today, and Q Edge is also showing bearishness yesterday and today. Let's look for bearish trades from Q Finder. The default sorting of all the symbols is by percentage change. You may find specific trade setups, the orange color cells indicate today's signal, or you could actually look for the stocks with the biggest percentage changes. And because all this can be run in real time, you can run it soon after market open, after the early range lines are formed, maybe around 9:40, and try to look for trade setups from there. I could open the charts by selecting the chart application on Metastock Power Console. Going back to Finder, let me highlight all the stocks that are down by more than 4% today. I'm going to look at all those stocks charts first. I'm opening them with the default daily template, Q entry chart template. This is a stock that is already near lower boundary. I'm not going to short it now. Remember, I mentioned when a stock is coming near memory resistance, you may look for shorting it. By applying that technique, you could short right at this point and book a significant profit by now. I will not short it now. Let's look at the next stock. I'm using the hotkey Control Tab to go through all the charts. Let me stop only if I see something interesting. You will see how quickly I'm able to decide, and once you use the Q systems after 1 week or 2 weeks, you should also be able to do the same, or maybe even faster than me. This has a memory trendline support. KTOS also has a memory trendline support, the green trendline support. Not going to short it. BMA also has a memory trendline support. TMHC, same thing. ADS, same green memory trendline support. SFM, Sprout Farmers Market. This doesn't have any green memory trendline support, however, it is already close to the lower boundary. If you look back and apply the Q trading technique, you could short the stock at this point using the go with flow short setup. At that time, you had the magenta flow color candle that would meet the requirements of a short trade. You could put stop just above the recent high at that point. Entry price would be here, and when the stock came to the yellow direction line, you would book profit. Could you short now? You could short now. It is looking bearish, but I don't do that. I am an active trader. I prefer to short when the signal came, and I'm running Q Finder. I'm looking at industry using Q Edge, looking at fundamentals using Q Vital every day. Why will I short today? I am already short from this day. I would have booked partial profit already and holding on to the remaining position. Under what conditions I hold on to partial position after initial profit is booked? That is if the technicals are weak, which is true here, but also I want the fundamentals and industry to be weak in some way. Therefore, if you shorted here, if you were using Q technique, Q systems, you could short here. Question is, today will you book full profit or not? Let's check out the fundamentals and industry status SFM. Let's look at the fundamentals first. Using SFM as the root stock, it has retrieved some data about the stock. Let me check out the industry by clicking the cog icon. The industry is weak, isn't it? It was strong earlier, cyan color, then it deteriorated, tried to go up for a while, and today it is the second worst performing industry. Isn't it nice how visually you can instantly know that you are able to short the stock? Remember, the stock SFM had a short opportunity earlier, and I think that came when the industry was weakening in this area. Again, at that time, you could perfectly time a short trade where the industry was starting to weaken after prolonged strength, and the stock also gave the first possible trend following go with flow short trade setup. What about the fundamentals? It has good valuation and it has good earnings growth also. Therefore, fundamentally, the stock is not weak. If so, I might not like to short the stock. It is a strong fundamental stock. Could you short a stock that is fundamentally strong? Yes, you could. I talked about all these forces that I try to align, and if you follow me on my traders forum, that is sagarnandi.com, I regularly share trading ideas and also I share about trading techniques under this category, Sagarnandi stock picks, and other Q traders share ideas under Q trader stock picks. In one of the recent articles in Sagarnandi stock picks, I mentioned that if I am taking a bearish trade, the only one condition, only one level from which I am flexible, I may not need to always align forces, is only in the short direction and for fundamentals. For technicals, I always align the forces. For industry also, I always align the forces. Market, I always like to align the forces. but fundamentals is one level from which I am flexible. I, Therefore, I might have shorted SFM, but instead of shorting SFM, if I look at the other peer stocks, there are 19 total peer stocks. Let's see if there are weak fundamental stocks. Yes, there are plenty, right? There are many stocks that are overvalued, and out of them, some has negative earnings growth, and there are few stocks that are medium valued and negative earnings growth. You could look for shorting opportunities from them. Why don't we do that? Let's look at these few stocks and see that, like SFM gave a shorting opportunity here, did the other stocks give a shorting opportunity? Let me close these stocks that I had open and go back to Q Vital, open all these stocks. Let me open these few stocks. Not all of them. Yes, all of them. They are either overvalued, magenta color valuation, or they have negative earnings growth. How did I quickly look for them? I use the single star button. Let me highlight them and click the chart icon. That is going to open all the charts using my default chart template, Q entry chart template in this case. That is what I'm using as default now. This has dropped a lot. You could short sometime here, sometime here. Not now. Now it is very low. Let me see if any short opportunity came recently. Here was one shorting opportunity for GO, grocery outlet. Around the same time that we saw a go with flow short trade in SFM, GO also gave a go with flow short trade setup at this point. It was already in a downtrend, lower high, lower low. Then it pulled back up and gave a magenta flow color candle. That was a signal for the go with flow trade setup. Short would be at this price level and you put stop just above recent high. As price came to the lower boundary, you book at least partial profit. You covered more than risk distance. That is how you could start with a stock like SFM, but instead of shorting SFM, which was fundamentally strong, you could find another peer stock in the same industry that also gave the same, or maybe another Q trade setup. In this case, the Q trade, same Q trade setup, go through trade setup, and short that instead of SFM. That is a very useful application of Q Vital. You may start with one stock, SFM in this case, but find a weaker stock in terms of fundamentals for shorting, and if you are looking for long trades, you could find a stronger stock in terms of fundamentals using Q Vital. It's almost the 1 hour point. Let me end today's session here. You may follow me on my Twitter page and also the public traders forum. I always share stock analysis, trading ideas before knowing the result. I have that much confidence on the Q systems and techniques. The stocks tend to do pretty well, but you can be the judge yourself. It is a public forum. All the sharings are open to the public. If you find any use of the posts in Twitter or my traders forum, I'll be very happy that you made use of that. Thanks once again for joining this live YouTube session. I look forward to seeing you in my next session. Have a great week and trade profitably. As I tend to say, there is no reason not to do so. Thank you and see you again.